right. Thanks everybody for joining. I know this is obviously a tumultuous time, and I've been feeling my own fears and stresses, and my deepest sympathies in regards to anyone else who's going through this situation and probably impacted far worse than I am. I'm a hypochondriac in the best of times, so I've been well aware of my breathing and any bodily sensations over the last few days. So it's just a stressful time, and that's before you even get into the economic and financial impact. During this time, I've been seeking out the advice of anyone who's willing to speak to me, and one of the first people that came to mind is one of my professors at Anderson, Eric Sussman, and he's been kind enough to take the time out to chat with us and give us his thoughts on the situation. And as we've been connecting over the last few days, he's got more thoughts than we could possibly get to in an hour. So I think what we should do is have you kind of go through everything that you're thinking. I know you've put a lot of work into this. And at the end, I'll ask some questions. And then anybody who has questions in the YouTube, I'll bring those up as well. Just bring them up in the chat, and I'll share them once you're done. So take it away.
Great. Thanks a million, Mike. Well, good morning, good afternoon, or good evening, whatever time of day it is for any of you out there. I also wanted to reiterate my sincere thanks for you joining in the teleconference today. The one thing I guess that a crisis does is bring people together, make us realize what really matters, what's important, and how we have responsibilities, not just to ourselves, but to each other and the communities to which we belong. We're all in this together, that's for sure, and it's a heart-wrenching situation. So again, we have to work collectively. Look, over my 25 years as a faculty member at UCLA Anderson, I've given innumerable talks, lectures, speeches, and presentation. But I have to be candid with you. I think this is probably the single most important presentation I have ever given in my life. I feel it. I feel the uncertainty, the angst, the stress, the fear that many of us feel. And so my views here are going to be principally maybe economics and political commentary, but I want you to understand that I completely empathize for those of you that have had losses of any sort. Obviously, health is most important, but I know some of you have been hit very personally by this. And so I want you to know that I empathize and I understand. My second comment I just want to make is that, look, these are my views. They're not the views of the Anderson School, and perhaps other faculty members or constituents of the school will have different or opposing views than my own. They'd be wrong, of course, but of course they're certainly entitled to opinions. Predictions and forecasts in any storm, in the eye of any storm, are difficult. This one certainly qualifies. It's tricky business. Many of you have heard me sort of joke over the years that Cleo, the former cable psychic, and the Psychic Friends Network both went bankrupt, which should tell you something about how difficult it is to make accurate forecasts even in the best of times. With that being said, my comments and my forecast predictions are based on history, my experience, research, and maybe some common sense. But let me be really clear and candid with you. This is a situation that's still evolving, and I think that's what makes this particular crisis more unnerving than most. And of course, it also involves people's health. The lack of certainty, the lack of hard data, and perhaps even the truth from our administration and our leadership has been lacking, and that adds to the uncertainty. And markets and investors never like uncertainty, ever. And so to the extent that the uncertainties and fears are even magnified here, given the specific situation of this particular crisis, obviously they're magnified. Third, as Mike said, there's just too much to talk about in an hour. There's so many things that I want to say, and for those of you who know me, I'm usually not wanting for things to say or for words, and I'm sure many of you have very personal questions. I hope I'll get to some of those. Many of you asked me over the years that I suggested that I do a regular podcast, and I've thought long and hard about doing it, and maybe this crisis and a little social isolation which we're facing might be the impetus, is the kick in the pants for me to do that. I'm not going to be able to answer all of your questions and give you personalized financial advice. That'd probably be irresponsible of me. I'll try to be more engaged publicly than I have maybe in the recent past here in social media. So stay tuned and forgive me in the interim. To the extent you want to contact me personally, my door and my email are always open. I guess my door, not so much these days, but certainly my email. And to the extent I can help you and I have the bandwidth to do so, I certainly will. Fourth, I'm not a public health expert. I'm an epidemiologist or an immunologist. And like everyone on this call, I didn't stay in a Holiday Inn Express last night. I was pre-med for about all of 2 quarters before I did a 180 and changed directions. What I am is certainly an optimist, and I know and believe in the extraordinary talents and abilities of humans individually and collectively. I also know that researchers around the globe in the public and private sectors, working for pharmaceutical companies and universities alike, are all expending tremendous resources, financial and human, to find a vaccine, to develop ways of retarding the spread of this darn thing, and so forth. I'm certain governments are going to fast track things to the extent that they're able, and God willing, perhaps the warmer weather will retard the virus's spread, like what happened with SARS and which routinely happens with a common flu. We'll just have to see. With those broad comments, let me make 2 really important points. One, this will pass. That is not to diminish in any way the loss of life, the health issues, the economic challenges that some are going to experience, but the overall economy and the markets will recover. So making rash, panic-driven portfolio decisions is absolutely unwise. That is not to say you shouldn't look at your portfolios, reduce leverage. Leverage in a crisis is, a very dangerous thing. So reduce leverage if you can, increase liquidity without panic selling. Maybe it's just making sure you can access tap credit lines or HELOCs if you have them on your homes. Not that you want to, but just you have it available if need be. Rebalancing your portfolios with advice is terrific, of course. And if you're going to be dipping back into the equity markets, think about companies with strong brands, strong balance sheets, modest leverage, low fixed cost structures. That's going to be really crucial over the next 6 months, all in all. And again, companies whose prices have been slashed as investors, both retail and institutional, have had to sell anything and everything to increase liquidity, meet margin calls. But look, trying to trade these short-term violent moves is nearly impossible, so please don't try to do so. None of us can time the market bottom. And my sense in looking at history is the market bottom is going to occur before the peak mortality rates from the virus. That's at least what history indicates. But trying to time it with precision is a fool's errand. So as far as the equity markets go, look, firms like Apple, Google, Procter & Gamble, and look, even Disney, maybe the one travel company or travel-related company I'd take a look at, which the stocks have just gotten hammered, would be excellent candidates to look at if you've got liquidity or you're sort of rebalancing your portfolio in some way. I'd say certain real estate investment trusts with diversified portfolios, modest leverage, whose dividend coverage is at least fairly safe, are going to be really good candidates. Look, the oil and gas sector has just been trashed. Oil prices are down 50% in just the last 2 weeks to 25-ish a barrel, hitting prices that were not even hit at the bottom of the Great Recession. Are there going to be opportunities in the oil and gas patch? I am sure there are. Obviously, they have often very high leverage and high fixed cost structures, and I'm not an expert in that particular sector, so I don't want to overstep my bounds here, but I have to believe there are opportunities. In the travel space with airlines and everything related just getting hammered, those I have less clarity on. I have no doubt that in the long run, people are going to return to their travel habits, and perhaps there'll be tremendous pent-up demand once we get the shackles of restraint on us off and we feel safe. People may, go traveling at a rapid pace, and that industry will recover quickly. But at the end of the day, looking at companies that don't have these high fixed cost structures, don't have excessive leverage, are going to be candidates. The opposite, in a quickly evaporating revenue environment are going to be is a dangerous financial cocktail, so be careful. Before I go further, I did want to show you four graphs, four pictures, and those of you who know me know I'm hardly a PowerPoint person. In fact, I'm usually not even a look at notes and that kind of speaker. Usually I just like to talk about things, but I did want to show you some graphs. So let me switch over. I'm going to share my screen with you all and pull up a few pictures that I think are important for us and informative. There we go. Didn't want to do that. So this is the, if you take a look at this, this goes back about 50 years and shows essentially all of the epidemics that occurred during that time frame. And I think the key takeaway, again, if the picture tells 1,000 words, this one certainly does it, that this will pass. That does, of course, we've been hit with a violent downturn, obviously, but this will pass. And if you look at various epidemics, the SARS epidemic in 2003, which you see that low there in that time period, and look what happened thereafter. You know, of course, the market's had a number of fits and starts in the 50 years we're talking about here. And of course, the dot-com implosion and the Great Recession and so forth. But look, on average, the declines are 8.5%. I mean, are sharp initially, but the returns actually 6 months after average 8.5%. So look, when this thing bounces from the bottom, the markets are going to go up from there. It just don't try to time the bottom. And I think it's very important. Again, this picture sort of gives you a perspective. This will pass. It's just unclear when. Another picture from a different perspective, going back not quite as far, but again, you can see various crises. I remember the implosion of long-term capital management in the fall of 1998 and the complete freezing of the capital markets. It happened like that. 9/11, all of us remember that, you know, and on and on. So look, this is another crisis. It's a painful and maybe a more fearful one, again, because it involves health issues and maybe, again, the uncertainty of it. But I am absolutely confident that this sharp downturn is going to provide tremendous opportunity. And it may be a little early to go back in, but over the next maybe couple of weeks, few weeks, I think there's going to be an opportunity to get back in the market again, if you're able. And I would encourage that. This is one I put together last night, just updated it. It shows the equity market returns for the Dow Jones, the S&P 500, and the NASDAQ going back from 2006. And I circled a couple things for us to look at. I want you to look at the 08 and 09 time period for a second and just look at that circle. Now, some of us on this call may have been on the younger side. Maybe that was a good thing in 2008. But I'm sure many of us, either watching this now or later, will have remembered it and lived it, you know, very particularly. If I had told you in 2008 to just take a chill pill, breathe deeply, relax, in 2009, it's going to come roaring back. The same percentage loss is going to be regained. You would have told me I was nuts, that I was crazy, and I didn't know what I was talking about. The fact is, in 08, the indices were down about 40%, and in 09, they rose about 40%. It's quite remarkable. Now, I didn't even predict it would rebound quite that sharply and that quickly, but I knew it was going to do so. And in fact, I remember being in some board meetings, and I said, as you guys know, on some investment boards, and I said, look, I'm telling you, I don't know when it's going to happen, or we're going to have a sharp rebound and perhaps a tremendous year in the next 3 to 5 years. It just happened in 2009. Now let's scroll over to the right and look at this year. The major indices are down about 30% so far, and we all have experienced that and know how painful it was. But it's, and for all of us on this call, it's hard to imagine 2009 happening in 2021. But I'm telling you, if we're all together a year from now and I see a similar picture, I won't be surprised. I'm telling you, there's reversions to the mean, and we know that. Look, in whether it was my class or some of the other courses you took, I'm sure many of you have seen the Ibbotson and Associates data going back from 1926. They roll it every year, where it shows the average annual returns and standard deviation of volatility for a bunch of different asset classes. And look, the average equity return in a given year, whether it's small cap stocks or large cap stocks, let's just say it ranges between 10 and 12%, something like that. Well, stop and think about what we just experienced in the last decade. We had a decade of unparalleled returns, the longest period of time in our nation's history without a recession. We had abnormal returns. Look at the graph. So am I shocked at what's happening this year? Well, I guess the answer is honestly yes and no. Obviously, the pandemic adds something to it, but the fact that we're having a sharp downturn doesn't surprise me at all, and none of us should be surprised. The positive is that we'll revert to the mean. If you ask me what I expect the equity markets to do over the next 5 years, I'd say 10 to 12%. And we'll bounce back from these very gut-wrenching market movements. Finally, this last chart is a graph of the VIX going back about 13, 14 years. The VIX, again, as many of us know, is a measure of the market's volatility. People sometimes call it the fear or uncertainty index. And it's a similar picture, right? It shows what happens to the volatility and fear and panic. And you can see where we were in the financial crisis, and we've returned to it much more sharply if you look at how fast the VIX has risen in this most recent pandemic. But we've had a bunch of spikes, and then things sort of return to some average level of fear or uncertainty. Arguably, we got too complacent, and I even mentioned that in class many times, that the lengthy market returns and some of the above average results that we all realize in our portfolios maybe made us complacent. But the fact is, this is just, I won't say history as usual. I don't want to be so flippant or glib, but the fact is, history, what did Twain say, may not repeat itself, but it certainly rhymes. All right, so let me go back to my Zoom here, get rid of the slide sharing and continue on. So the overall takeaway from these pictures is, one, look, psychology is going to change, markets are going to turn, and quickly, without fanfare, without warning. And I think these sort of sharp turns up and down maybe tell us something about ourselves and humans, right? We are subject to tremendous fear and panic at times, and the opposite is true. But stop and think for a second. How many of you in your investment decisions the last few years thought about the Spanish flu? How many of you, all of us, lived through 9/11 and all that brought? Think about that. Do you even think about, or have you thought about the financial crisis, which wasn't that long ago? You don't, and you won't in a period of time. When you're in the middle of the storm, it's so hard to sort of step back from that. But I'm telling you, as tragic as and impactful as those events and as this is, it will pass. So what will restore confidence? Because that's the key. We need to restore investor confidence. It might be a particular government action, maybe something new or novel announced by the Fed, allowing firms with investment grade credit ratings to issue commercial paper backstopped by the government. Maybe it's going to be the government agreeing to make low interest rate loans with strings attached. Do not get me wrong, we'll talk about that. I know many on the left abhor the thought of bailouts and government largesse to bail out these companies and the moral hazards that might bring. But whether those strings are reduced executive compensation, restrictions on stock buybacks, some other terms we'll see. But I think to the extent that the government is able to calm us down, restore confidence is very important. The key is, look, we are in a recession. We will have a recession. Let's not kid ourselves. The key is for the government, in concert, local, state, and national government, to do everything it can to make sure we don't have a depression. Okay, and I'll talk about my thoughts there. The other thought is that, look, as much as this is a pandemic crisis, of course, I will tell you, in my opinion, it's a crisis of leadership. In class, I avoid getting overly political, perhaps for obvious reasons, but as many of you know, I've not been shy about expressing my disdain for President Trump from the very moment he won the election. I wrote a lengthy piece and did a video about this, a couple of videos actually, from right after the election in November 2016 and in January 2017. And the one in January 2017, I think it's on Facebook. I would encourage you to watch it. It was really about trust and truth and how it is imperative. We must have faith and confidence in that the information we're getting from our leadership is truthful and reliable, especially in crisis. Look, we got into the Iraq war because the false pretenses that there were weapons of mass destruction that didn't exist. And just think about that. We were misled. And again, whether that was intentional negligence, I'll leave for others to opine on. But I think what we're seeing now, at least in part, is a consequence of not having faith and confidence in our leadership. You know, crises are maybe a little like sunshine, you know, that they say sunshine's the best disinfectant. But I'm telling you, I think this crisis may absolutely and will has maybe some of our shortcomings in leadership, planning, and strategy. Look, one of government's jobs is to manage macro level risks that you and I cannot do. That includes national security, of course, but yes, it includes planning for, managing, preventing pandemics. You know, many will say, "Oh, you couldn't have seen this coming. It came out of nowhere," and that's bull. Okay, sure, those of us who don't work in public health and epidemiology maybe haven't had firsthand experience with former viral outbreaks, wouldn't have seen this coming. But let's look at the graph I showed you. In the last not too distant past, we've had SARS, Ebola, H1, and of course, going back further, the Spanish flu.
I'll have you to stick on.
And if you really think people couldn't see it coming, I have two things you should see or read, and I encourage you. One is to watch a TED Talk given by Bill Gates. Yes, that Bill Gates. Some of you have probably already seen it, in 2015. It's a 9-minute talk, or very short, as I recall, a TED Talk, as they all are. And one of it, and he talks about pandemics. It's all about pandemics. And one of the things he says, it was quite a remarkable quote. He said that the next war that we face will not be with missiles, but with microbes. And that was 2015. Even more recently, the Smithsonian Magazine ran a piece in November of 2017. And the title, let me read the title of this article, because it's right on point. It says, "The United States is not ready for another flu pandemic." All right. How prescient and appropriate was that? We're talking November of 2017. So to say that no one saw it coming, okay, sure, they couldn't pinpoint the date and what would happen, but certainly lots of people knew it was coming, and it's going to happen. It sort of reminds me of, when our earthquake preparedness kit sales at their highest levels? Of course, after the earthquake. So that's people being irrational. It seems to me it's government's job to help local communities, states, and us plan for these predictable, if not precisely knowable crises. This is not the first global pandemic, and it certainly won't be the last. I mean, is there going to be another earthquake in Southern California? Most of us, certainly I'm sitting here in West Los Angeles. It's a silly question. We don't know when or what the epicenter will be, but we know there's going to be an earthquake. And a few years ago, the city of Los Angeles passed regulations that required landlords, owners of certain apartment buildings, to seismically retrofit their buildings. And landlords went bananas. There's no ROI. It's going to cost a fortune. And my response was, no, good. That's what government's job is. Of course, an individual landlord is not going to seismically retrofit their apartment building, because how do you think about the ROI? You can't increase the tenant rent by doing that. Now, look, everyone on this call may not be here when it happens, but that regulation is going to save lives. It will save lives. When? I don't know. But look, that's the issue. Politicians focused on the next election don't find it politically expedient generally to make these tough decisions and plan. Because again, you don't know when it's going to happen, and the ROIs, the returns on investment, are hard to quantify. But if I were to quote John Wooden, perhaps the most famous member of the UCLA community in history, failing to plan is planning to fail. And when these crises become politicized and you've got propaganda machines in the background furthering the politicization of something like this, you know probably what I'm talking about. It's truly tragic. All right, there's gonna be a lot of postmortem on what happened, why we were so ill prepared, and why things weren't taken. This pandemic wasn't taken more seriously earlier on. I'll leave that for others. Let me change directions and talk a little about real estate. I know that's why many of you are here. So let's do that. Let me give some high-level thoughts on hotel, retail, office, and multifamily markets. They're in that order, not by accident, because those are the segments of the market that I think are most directly impacted by this pandemic. Obviously, hotel and vacation properties are going to be hit very hard. I recently read that Marriott's occupancy here in the US and in Europe is now below 20%. And I don't know of any hotel under the sun that can survive at a 20% occupancy rate, given their high fixed cost structures and even at modest debt levels. Look, while the industry was hit very hard in the last financial crisis, I think those losses might pale in comparison here because of the lockdown and shutdown of travel, which will be longer lived than what happened in the last crisis. The federal government, I imagine, is going to step in to some degree, and lenders are going to have to work very closely with hotel owners to restructure debts. That may not be enough, because at 20% occupancy and minimal staffing levels, even not paying the mortgage with those kind of revenues, you may not be able to meet your costs. We'll just have to see. It's going to be a tough road to hoe there. Retail is also going to be challenging, but more of a mixed bag. Grocery stores, drug chains, and other national retailers will probably be okay for at least a little while. I think the biggest problem right now is the supply chain. Their supply chains are disrupted, and they're having problems with goods. And obviously, to the extent their customers, the consumer, is having trouble because of job losses or furloughs or that sort of thing, that's going to be an issue. Obviously, with Amazon, the weaker brick and mortar chains have mostly shuttered either entirely or countless numbers of stores. Those chains on life support, Rite Aid, Bed Bath and Beyond, look, this pandemic may be the nail in their coffin, I don't know. Restaurants, mom and pops, local, regional retailers are going to need help. And that's really important. That's going to be help in terms of government assistance, landlord assistance, we'll talk about that, rent abatements, and so forth. Restaurants that offer drive-through may be in better shape than those that don't because of the restrictions on sit-down. In fact, anecdotally, I drove by the In-N-Out Burger earlier this week during lunchtime, and I have never seen the line that long. It went blocks and blocks. It was not hardly in and out. They were in line for quite some time. But so look, they're probably very well positioned, and those that are offering takeout services, a core part of their operations, will be in good shape, better shape, I would say. In office, again, I think it's going to be a similar story. Rent abatements, and lenders are going to have to work with office landlords. We'll just have to see how that lays out. Multifamily is probably the safest haven that there is, but it's not going to be without its exposure here for sure. It may be hard to outsource housing, but there are going to be losses and challenges. I just think, job losses, even the uncertainty of a job loss, lack of new hiring, people not moving, will certainly be significant headwinds in the industry. Tenants are going to double or triple up. Some younger people may do what they did after the crisis and move back home temporarily. I don't see that as big an issue this time. We'll have to see. On the other hand, there will be some tailwinds. People are not going to move. They're probably likely to stay pat, which will keep those tenants, at least the occupancy level, stable. Those that were thinking about buying a home, a single family home, because the economy was doing well and of course interest rates were so low, they're obviously going to reconsider those decisions, and they'll be renting for probably some period of time. The big question that I have in multifamily is, are people just going to not pay rent? Look, I think if people have cash and cash flow and are working, I think, yes, they'll continue to pay rent for a little while. Or some try to take advantage of the situation, and that's across the real estate sphere, frankly, and not pay rent, trying to take advantage of the situation. Thinking maybe that landlords will work with them. The courts don't have the bandwidth to deal with evictions anyways, or they'll get some kind of support from local or state governments. The answer is maybe. I hope not. I would encourage you that all of us pay our rents, do what we would do the right thing. And that's across the board. If for those of you who, and I'm sure there's some on this call that are worried, talk to your landlords, be transparent. If you've had furloughs or job losses or real economic hits, talk to your landlords, have backup documentation. Please don't be unethical to try to take advantage of the situation. That's not doing it, doesn't do anybody but any good. And landlords, and that includes our firm, Clear Capital, and other firms, I think, look, I think financially it probably makes sense to work with your tenants, but look, I think global and collective compassion is what's really needed. If we're all working in this together, we'll get through it. I think we will. I look at sort of comparisons like a rowboat in an Olympics competition, where it's not just that we're all rowing, but we're rowing in unison, in a coordinated way. And if tenants and landlords and lenders and utility companies and local property tax authorities all work together, we're going to get through it and we'll be fine. It's sort of like I pray and hope for those of us more into game theory that the prisoner's dilemma doesn't become a widespread phenomena. The prisoner's dilemma where collaboration might lead to an ultimately better outcome, but doesn't happen because in our selfish self-interest, we don't act collaboratively. I hope that doesn't happen. At our firm, again, Clear Capital, obviously we're monitoring the situation very carefully. The first couple of weeks of April are going to be important in the real estate business across the board because, of course, everyone's pretty much paid their March rent. So we'll have to see how it plays out. I'm looking forward to hearing guidance from Fannie Mae and Freddie Mac, obviously the two biggest capital providers in our space, to see what they have to say. And obviously, I'll update you as I hear. Let's transition to some high-level math and economic realities. I want to give you guys some facts, maybe some things to think about. Every year, on average, the U.S. Treasury issues about $1.2 trillion in securities, from Treasury bills to Treasury bonds. Our federal deficit was already about $1 trillion this year because of the decreased tax receipts following the Tax Act of 2017. But if you look at sort of the global consolidated view, you look at household savings domestically, corporate savings, you throw in state, local government deficits, it's really kind of a balancing act in a normal economy. It all kind of balances out and we're in reasonable equilibrium. Obviously, this is going to change and we can kind of throw that out the window. My sense is we're looking at, I don't know, $3.5 to $5 trillion of government largesse funding intervention, some deficit spending over the next 12 to 18 months. We'll see what that looks like. The other reality is 70% of the US economy is us, it's the consumer. So whatever the government does, whatever all of us do, it is crucial, it is critical that we protect the US consumer, that whatever decisions we make, that we're focusing on us, it sounds so self-interested, but that's the reality, so that we continue to at least keep the economy from sinking into some very deep and long-mired recession. So who's done what so far? Let me just talk about that a little bit. The Fed has been, they've been busy little bees. They've done about 5 or 6 things. They've reduced the Fed funds rate, the interest rate tied to the prime rate, to essentially 0. Twice 2 rate drops this month. I'll talk about that in a second. I think that was sort of not very helpful, but we'll talk about it. They've ramped up bond purchases. Last Sunday, they authorized the purchase of $700 billion in bonds. That's Treasury securities and another $200 billion in mortgage bonds. My understanding is that they've bought over half of them already this week. I read this morning that they're actually also now authorized to buy municipal securities. So it's sort of unclear the effect that's how in the financial markets. It seems, again, I haven't looked while we're talking here. It seemed like the markets, certainly yesterday was up and today was a little less gut wrenching and a little more stable than it has been. But again, I'm not in real time and we know how volatile these markets are. They've agreed to provide up to $90 billion in liquidity to various foreign central banks, dollar liquidities, various foreign central banks. Again, Not sure how material that is or what will be. They've also authorized $1 trillion of investment in the repo market, the overnight repo market, which is really the commercial paper market, short-term borrowings by high-quality corporations. You know, are all these actions adequate, sufficient? I'm not sure. I do think reducing interest rates was sort of a bullet that didn't really have much efficacy and won't, because it doesn't matter if we're not really buying and interest rates were already so low. The other thing that's happened is credit spreads have widened substantially over the last couple of weeks. So as interest rates have dropped, rates have increased. In fact, you may have noticed, for those of you seeking to refi your homes and didn't get in that initial pile, they've raised rates because they had excessive demand for refinances. So it really hasn't had much of an impact. The question is, what bullets does the Fed have left? Ben Bernanke and Janet Yellen, the two former Fed chairs before Jerome Powell, have suggested that the Fed be allowed to purchase corporate debt. Now that would be a sea change. It's one of those things that has caused me some concern. I've talked about it in class. The corporate debt market has exploded. It exceeds household debt now for the first time in our history, as firms took advantage, of course, of the low rates and investors demanding, looking anywhere and everywhere for yield. What's disconcerting to a certain extent is they used a fair amount of this debt, or at least not an insignificant amount, to buy back stock, which now I'm sure that they regret having done so. But we'll see what the Fed does. As far as Congress, Congress, as you know, is agreeing to send people money. We're going to send people some checks. I think in the short run, that's okay. I've thought about it in a very short run, just to stabilize things, put money in people's accounts, keep them spending at least on necessities and hopefully paying their rent. I'm okay with that. But that is not a sustainable strategy, because at the end of the day, you give people money, but you don't save their jobs. What does that do? So I know I'm not alone in this. I read a thoughtful piece from the management of Jeffries and Company, the investment bank, who talked about, and I agree with this. I mean, again, I agree wholeheartedly with it, that while a lot of us on this call may not be fond of the word bailout and feel it's corporate largesse and the rest of it, if you sort of reorient your thinking that we need to protect jobs, we need to protect the US consumer, that is crucial. So to the extent that the government does take action, provide liquidity, loans, equity infusions with all strings attached, and those strings can include no change in employment levels. I would make that a requirement that you must, we're going to help you, but you are not to terminate staff. You need to cut your own salaries, or they need to take a series of steps before doing so. They need to cut their salaries to some reasonable multiple of the lowest paid employee. If we're all in this together, yeah, the C-suite and directors need to do their share as well. Link it to no more stock buybacks, or other sort of measures that will sort of restrict corporate behavior. I know it's controversial, and I understand the moral hazard argument that many make, that this just compels, promotes bad behavior. Again, it's hard for me to argue with that, but it's sort of the lesser of evils. And if you want to make a point because you believe strongly in that, it's my opinion, my very strong opinion, that the economic losses, the consequences to all of us, individually and collectively, will be far greater if we don't recognize the moral hazard argument, but deal with it appropriate. As far as the state, local government level, I can't possibly summarize everything that's been done. Obviously, most of us are in California, and we've seen we're basically affected really after today on lockdown. And they're certainly not sitting on their hands. The one thing that's interesting is New York, Los Angeles, the state of California are promoting anti-eviction measures to protect tenants from eviction in the event they're unable to pay their rent because of the virus, where they lost their job, have been furloughed, have expenses related to the virus. And again, I think that's more than reasonable. As I said earlier, I think if tenants can demonstrate this, landlords must do the right thing. I think it's in their financial interest to do so. It's in their human interest to do so. We all need to work together. And then that goes to the lenders as well. We all got to row the boat. All right. So let me make a few other concluding comments and we'll open it up for questions. One, this will pass. This will pass. The uncertainty may be unbearable. It may be gut-wrenching, and the inept response perhaps from our federal government, maybe the stumbling response from our federal government didn't help. And again, there'll be lots of forensic analysis on what happened and why in time, and history will be the judge. But I think there were some real stumbles, and I don't think that's really debatable. Two is maybe more of an emotional plea. Help each other out. All right, we have to. We're in this together. You know, we're currently housing 2 kids from our youngest daughter's dorm. When their dorms were shuttered, they had nowhere to go because they were on scholarship, couldn't afford to get home, and they couldn't get home travel-wise. And when our daughter asked if they could come stay with us for indefinitely, there was no answer other than, of course, the answer is yes. So do your part. We all can do something. For those of us who are financially in a position to do so, whether it's donate to various organizations that are meaningful and doing good things, reach out across the aisle, reach out, to friends, to those that might be in need, pick up some groceries for someone who can't get out or shouldn't go out of their home. And again, as I reach across the aisle, our country's been divided for a long time. And someone said that we needed a war because a war is what will unite us. I've read that the end of the Cold War marked the beginning of divisive partisan politics because we no longer had a common enemy. Well, I'm telling you right now, we have a common enemy. And so let's unite and do what we all need to do collectively to get through this. And last but not least, the other day on Tuesday, just an anecdote, I was driving into work. I did come to the office. I think the last day before today I did so. Anyways, and it was kind of a weird day in Los Angeles weather-wise. It was raining, but the sun was out. We've all experienced that. And 2 blocks from my house, I saw something I'd never seen in my entire 23 years of living there. And it just seemed so appropriate. So it's the last thing I'm going to share with you, the last slide. This is a picture I took literally 2 blocks from my house, so I have to share that. So that was a double rainbow, and I think the market was down 1,000, and I was listening to the news, and it was just bad. And there, out of my front window, was that I stopped the car and took a picture. Anyway, so somehow I may not be the most religious individual, but somehow it seems spiritual and a little bit of karma. So, anyways, let's do our part. Let me open it up for questions. I do want to say one last thing, and that is thank you. Thank you for being here. Thank you for supporting me all these years and for taking some time out of your mornings to listen to me. I will do the best I can to help anyone who needs it. As many of you who remember who took my class, I always had the alumni consulting fee that, when you're a student, any advice you could possibly need is free, as it should be. But that once you graduate, you had to pay the alumni consulting fee. And you may remember that was a bottle of red wine or scotch, not money. I am hereby and officially relaxing that policy. You do not have to get me wine or scotch if you need any personal advice. Just be patient with me. I'm going to probably have a busy schedule the next few weeks just dealing with our own firm's issues. And I got to grade a lot of final exams and get ready to teach remotely in the spring. But any way that I can be of help to any of you that are important to me, I will do so. So thank you. Mike, what do you got for me?
Well, thank you for that.
Now can I turn my volume?
Yeah, no, you can go back on. No, I really appreciate that. Very well thought out and covers pretty much every topic anyone's interested in, but have a lot of questions that have come in through chat and some questions that I have myself. Like, you compared this to previous epidemics, and maybe this is just being a paranoid millennial and thinking that this is different than anything else in the past. But to me, this feels like a more drastic, more widespread pandemic than any of the pandemics that you're comparing this to. Tell me why I'm wrong.
If those of you, while you're in social isolation, we probably all have, and they've canceled every sporting event and entertainment event and every bar. It's horrible. You might want to pick up a book. It's called This Time is Different. It's actually called This Time is Different, Mike, which goes through the history of crises and financial crises. And, obviously it goes through all of them in great detail. Of course, every crisis is different. Every market cycle is different and unique. But like I said, the Spanish flu was global and a tremendous loss of life. And we had the roaring 20s thereafter. And of course, that led to ultimately the Great Depression and some other issues. But you're right. This is larger in scale and scope, perhaps. But and to that extent, it's uncertain and different. But I am very confident that the end and the ultimate outcome will be the same. It's just how long it takes. But as I told you, just think about how many, Mike, you may be a millennial and maybe a paranoid one, but, and I don't know how many investments you've made, but do you really think about when you made your last investment, whatever it was, whatever stock, did you think about the financial crisis? Did you go, oh my God, I remember 2008 and 9, now you were younger, but you didn't. And so it's my belief that they will also, because it's global, scientists around the world, everywhere, are looking for vaccines and the like. And I have ultimate confidence whether it's the United States or German or South Korean, some scientist is going to find it. We'll find other remedies or maybe things to just ward off the virus. And that will happen, I think, in sooner than you might think. Maybe I'm the eternal optimist, but we'll see.
If you could stop sharing your screen so that everybody can see you. Perfect. One of the other things that's come up a lot, at least in my own reading, is like, is there any chance that we've overreacted to this? Like, have we caused more economic pain on ourselves than if we had just done nothing?
It seems to me there's two questions in there, Mike. One, do we overreact? Yes, that's human nature. Panic and fear lead to overreaction and actually suboptimal decision making, whether you're, I don't know if any of you are pilots, but they've done lots of studies that they find that what happens in aviation accidents isn't the actual initial thing. Oftentimes it's pilot reaction or panic and failure to react appropriately. I think, again, I'm not trying to make light of that, but just to highlight that we overreact, we do. There's a theoretical economic and maybe wonkish academic article that if you do nothing, if we'd done nothing, and a certain percentage would get sick, a certain percentage would die, and as tragic as that is, that somehow that would be, better than the economic losses, the deaths, actually, the homelessness potentially, and everything else that comes from a real depression or crisis. Look, that's an academic kind of wonkish argument. When it comes to human life, I don't know how you can overreact. So it's a complicated question and nuanced question, but I do think investors overreact. We panic, but that's separate and distinct from the, maybe Governor Newsom calling a state lockdown, which people might say that's an overdoing it. Look, we want to save lives, we want to keep people safe, and it's hard for me to think differently.
And this is a question that I've had myself, but luckily came up in chat as well, so I'm not alone. Why are people expected to plan for the future and plan for the worst and expected to have emergency funds on hand, but it appears that companies are not?
You're not going to get any argument from me. Look, I think we got to be careful about drawing false comparisons, but I agree with you. That's why, to me, look, these companies that borrowed money and bought back stock, and I talked about this in class. I thought it was absurd. I mean, some of it was absurd. And and again, for those who are interested, go to LinkedIn. I wrote a very lengthy piece about the Tax Act of 2017. I thought it was a horrible bill. That isn't to say we didn't need tax reform, but we didn't need to do some of the things that we did and build this hole. And companies brought back cash. And of course, what they do, they bought back stock. So you're preaching to the choir. So now, look, as I talked about, I recognize the moral hazard problem, and I'm not going to discount it. So I am with everyone on this call. If we're going to bail out these companies, and I think we do need to make sure those jobs are protected, it's got to come with strings. And how that gets done in terms of real teeth and specifics, I got to think through that, and I hope we have thoughtful politicians. Seems maybe an oxymoron sometimes, that develop policies that deal with that. But I hear you loudly and clearly. I will also say, just your question and all that question also deals with the wealth inequality in this country. Okay. And I think, and I've written about it, I have said that is, in my opinion, the biggest threat. It has been the biggest threat to our nation, the erosion of the middle class. You know, 3 people owning half of the collective wealth of the bottom half is absurd to me. It's wrong, I think. And I'm with you. We have to find a balance. I'm not a socialist by any means. I'm a compassionate capitalist. I believe in wealth, but we can't expect of individuals what we don't expect of companies and our government, for that matter.
How do you see this impacting the election?
I wrote a Facebook post on that the other day, and what I basically said is that this will be Trump's Waterloo. I believe this is going to do him in. And I know things may recover, but the data is lagging. We're in recession now, in a recession defined as 2 consecutive quarters of declines in GDP. So we'll know for sure right before the election. So they're going to say we're in recession. It's going to take some time. This is not going to be an overnight cure. So I, for any number of reasons, I believe that this is an issue. I believe if the voting in Michigan is any indicator, where in the Democratic primary, 300,000 more voters came out to vote in the primary than did in the last election. I think that's meaningful. I think people of color and women are more motivated. And I think even with my Republican friends, and I've got a lot on this call, and you know, I'm a centrist. I try to be a moderate and listen to all views. It's sort of my job, I think, as a teacher, really. I know a lot of people on the right may have held their nose to vote for Trump, but you now see, you guys, you now all see what happens when you get someone who doesn't tell the truth in moments of crisis. Okay, I understand that many of you care a lot about certain issues. Regulation, taxes, Israel, women's right to choose. I get all that, I do. And I'm okay with conservative principles, but Trump is a different conservative, or if you want to call him that. And I think this will be his Waterloo. I'll be writing about that. I'll be writing about leadership on a separate post sometime in the next week.
So you don't think the best response as a president is to attack reporters in the press briefings?
Calling it the Chinese virus. He was warned yesterday not to. Even the Spanish flu, it looks like it was originated in the United States, for God's sake. It just doesn't help us. It doesn't, there's no reason to do it. He was, you know, why do that? He's now calling himself a wartime president because, of course, he was the economy president. He was the stock market president, and that's now at issue. So now he's a wartime president. Look, it's hard for me to hold back my feelings. Some of you have written on my student evaluations that I shouldn't be political or go against, say anything anti-Trump, and I always am grateful that I have tenure, I guess, at those moments. But you know, I have to be honest with you all, and I'll never be anything but.
A lot of people have been asking about the potential impact to industrial real estate. What are your thoughts there?
Well, look, industrial real estate is obviously very much tied these days to e-tailing and distribution hubs. So obviously in the short run, because there's disruptions in the supply chain, that includes, of course, goods coming in from China and elsewhere. Certainly if the consumer does curtail their spending, and they're certainly going to some degree, industrial will also be hit and so forth. It's going to be the same story. There'll be some rent abatements, landlords working with tenants. Certainly the extent, you know, you've got Amazon and the Krogers and other large companies leasing huge amounts of space. That's not going to be a problem, I don't see, in the short run. Obviously, I think industrial is also probably in the spectrum, I didn't talk about, would be right above multifamily and below office in that risk hierarchy I had.
When do you see things returning to normal? A lot of people have been talking about how once summer comes and increased temperature, like it's going to improve our immune systems, it's going to make the virus spread less easily. What do you think about that?
Well, okay, first of all, if any of you can tell me what the heck normal is, let me know. I'm not even sure anymore what normal is, and you're asking someone who's profoundly abnormal to opine on normal. But this is where I told you all, this is a little bit, this is different, Mike, obviously, um, in terms of what happens with the strong government response, the curve of infection, and the efforts to find either a vaccine or even something that can, just um, prevent us, or at least keep us safer if we happen to get infected. So I don't know. I do think, it could be shorter than people think. Again, if I think if we get some good news, it's going to be a few weeks, but if we get some good news that the curve is declining, the number of deaths is declining, the number of hospitalizations is declining, and our healthcare system is not getting overwhelmed because of us doing social isolation and doing the right things individually and collectively, I think we could be okay by the fall. And again, and I mean, okay, it brought well, all the government can see some of its largesse and measures to help us, but it's evolving, and I recognize that.
And there's something about this crisis that it just goes against everything that we've been programmed and taught to think and feel by like our current society, and how available technology is, and how much of an instant gratification society we've become. Like this is obviously going to take much longer than we expect, and much longer than we hope to get to the other side of. So again, that's why like when I see you compare it to previous epidemics, like I just feel like there's something different there that maybe you don't have the bandwidth to sustain.
Mike, all right, Michael, and I got to ask you, you should never ask this question in public, but I think you told me you're 28, 29, 30?
31.
31. Of course it's different. Okay, so I can do some simple math, and whatever crises you went through, it's just a question of age. I joke in class, and believe me, I don't mean to be again flippant. History is just different people doing the same crap over again. So look, your children, and you don't have them yet, probably, but if you do, those of you who have young children, they're not. This is going to be again like the Spanish flu is to you, actually, as far as history. So it's different because you didn't live through it. It's just another crisis, and every crisis brings opportunity, and every crisis brings recovery. If you have faith in our systems and human ingenuity, and how good we can be, actually, if we really want to be, we can be terribly evil. But I don't see it that way. It's different because it's present, it's extant right now, and you're feeling it. But it really isn't any different in the broader scheme of markets, cycles, and life. I mean, to make one other comment. I got very philosophical, and maybe it's a bad habit of a teacher, but look, if you live long enough, if you're lucky enough, if you're blessed enough to have a long life, you're going to have cycles. You're going to have moments of extraordinary loss, tragedy, crisis. And we can go through the last, for those of us who are old enough, go through the last 30, 40, 50 years and tick off a bunch of them. And you're going to have moments of incredible exhilaration, success, joy, pleasure. That's life. That is what it is. So whatever you're experiencing now, as painful and gut-wrenching it's what makes a life. It's not different in the scheme of things. It's just, this is different because it is, yes, it's a new virus, and it's maybe one of the more virulent ones. But again, I'm telling you, as God is my witness, we'll get through it.
Do you think the fiscal proposals that are currently being debated in the Senate are aggressive enough?
And that's where I haven't, forgive me, I'm not on top of all the real-time proposals. I read that McConnell has a proposal for $1 trillion, and he's doing it kind of unilaterally, as Mitch McConnell is sometimes wont to do. I can't speak specifically. What I can say, and what I told you earlier, is on both sides of the aisle, they need to protect the consumer. They need to protect jobs. That has to be their number one focus. So if they're going to frame it as a bailout, I don't like that. It's not bailing out the corporation. It's Job Protection Act, okay? And whatever economic largesse assistance is provided to companies, it's got to come with strings. And one of the strings, I think, is protecting jobs. As I said, the only way you can lay off people is you have to go through a bunch of steps. And like I said, that includes significant cuts to C-suite salaries, suspension of stock buybacks, maybe a few other things that we can negotiate and collectively come up with. But I can't speak specifically to all the different proposals, and I apologize about that.
Any thoughts on the impact of the US dollar and its impact in all of this? This is a question from YouTube.
Yeah, the US dollar, I think, has rallied. I was going to pull up some data. I just didn't have time. Obviously, like in any crisis, there's a flight to quality. And whatever you think, I've said in class, what do we think of the United States in general? We're still considered the highest quality, the safest bet. So certainly the dollar, I would expect to be strong and has been strong. It might be something to look at as a hedge with portfolio advice, because I think, the dollar is a safe haven. That creates complications, as we all know, in terms of trade imbalances, but that's the reality. The flight to quality is, the dollar is not immune from that.
And what are your thoughts on emerging markets and their impact in all of this?
Oh boy, emerging markets. Okay, that's a huge question, and again, even defining what an emerging market is these days, you can get some controversy. People talk about the BRICS: Brazil, Russia, India, China. Is South Korea emerging? But look, the emerging markets have always been extremely volatile. If you look at historical returns and you look at sort of the ranking of those returns in various asset classes, emerging markets have the strange habit of either being at the very top, being the top performers in a given year, or the very bottom, the worst performers. So there is something about that. And I would say, look, if you're a long-term investor, you got a long runway, and that's important, then I would say emerging markets are probably a good place to look. I would probably do it through an ETF or some index, as opposed to trying to do individual stocks. But again, that's about as much as I can say.
All right. I got one more question for you, and I know there's a lot of
one more. What kind of audience have we got? My gosh.
Yeah, I got one more, and I know we have a lot of questions on YouTube, so I'm going to direct the rest of them to your YouTube page or any future events that we do together. Do you think that the quarantine and the impact of like all of us being locked in our apartments, all of us that have moved to cities, and the future effects of companies being potentially more open to work from home after this, is that going to impact or draw more people out of cities going forward?
I was on another conference call this morning, and one of the speakers, a very experienced individual and very thoughtful, bright guy, said that he thought this was going to permanently alter certain things. And I am always very hesitant to say that, because humans are social beings. We're social creatures. We are who we are. Or as Popeye said, I is who I is. Some of you may not even remember that one. But in any event, in the short run, of course, I assume Zoom stock is zooming, and people are going to be doing telecommuting and this and that. And it will take time to get back to whatever normal. But if you ask me, in my opinion, in 5 years, whether it's going to have created really significant changes to the landscape, I'd say no. We're social beings. The return to our inner cities, because your generation and maybe the one that preceded you like to be in entertainment venues with good food, restaurants, housing, and everything, work in close proximity. I don't think that's going to change. And for better or for worse, as I said, we're social creatures. We like each other. We used to. I think we do. And so I'd be hesitant about making these broad observations. Things are going to change permanently. It may persist for a little while, but things revert to means. They do. Averages are averages over long times for a good reason.
All right. I'll let you go after one more.
I have a 1 o'clock lunch. I probably have a hard stop at 12:50, but so
your thoughts on Bitcoin?
Oh, geez. Yeah, Bitcoin's gotten trashed. Okay, Bitcoin. That's your last question you had to ask me about Bitcoin? I'm amazed that you asked me my views on cannabis. Anyways, I wasn't a fan of Bitcoin to begin with. Not that I don't get the theoretical attraction of a frictionless currency that can be traded quietly and all of that. I get it. But the fact that it doesn't have it relies on us. There's going to be fraud. It doesn't have a central bank or anyone backing it per se. It's the faith and trust of your counterparty. There have been thefts and everything else. And if you look at Bitcoin's price with all those great predictions, what's it, $5,200, something like that? It's actually crashed quite a bit, probably because people were selling everything to raise cash. But I'm not a fan. You want to play in currencies, play the US dollar, leave Bitcoin for your gambling habits or enjoyment. Go back to Vegas when it reopens, hit the craps tables, get a free drink. At least you'll get a free drink.
Well, I thank you for the time. Thank you for your thoughts. Going forward, I plan on doing more talks like this, and potentially having you as a guest, or other professors or others outside of the UCLA community. So definitely ask others to join and contribute their thoughts as well. And appreciate everybody taking the time out to chat and share their thoughts and comments.
Likewise, as I said, I'm not sure I can deal with individual questions, in volume, but I'm happy to converse with any of you about your thoughts and concerns, and give you my unfettered views on things as best I can. Thank you for chiming in and participating.
All right. Thanks, everybody. Have a nice day.